Hello everyone, this is Jay, and since 81% of you picked for me to give an update on my growth and dividend portfolio together on a weekly basis, I'm gonna start doing that today. And earlier this week, as I mentioned in the previous video, I was able to make a special deposit from my high yield savings account. I put some money into my growth portfolio, some money into my dividend portfolio, and made a couple purchases that I'm gonna show you today. If you're new to the channel, I am a fractional share investor. I invest every Friday, no matter what the price is at for some of my positions. But let's go right into my growth portfolio. And these were the purchases that I made on August 6th, $20 into each one of these positions, which the first one was Google at a share price of $157.28. That one I was very happy about. Same thing with Amazon. Another $20 purchase at $159.61. Both of these had a nice share price dip on the recent volatility from the stock market, especially the tech sector has been selling off. So I also took advantage and I put $20 into VGT, my Vanguard's Information Technology ETF, which was at $516.12. VGT was around $600 not long ago. I did not buy a 600, but once it dipped again into the lower 500s, I am starting to buy again. So I want to build that position right there, especially I'm holding for like 10, 15 years before hopefully the plan with VGT is selling it off and then put it into like SCHD or one of my other dividend positions so I can earn some very nice dividend. But if you see the growth portfolio, which is this one right here, I'm at $1,300 in market value. This is a fairly new portfolio. I've been depositing like $20 every week. That's how I have been growing this portfolio. I started with a couple $100, right? But I've been doing since then. I've been just putting $20, $20, $25, $30. So as you can see right here, most of my positions are in the green except Tesla, which is in the negative by 3%. But Tesla has a lot of volatility right now, and always pretty much. But right now, as you can see, my cost per share is $206 in Tesla. The share price is at $198, and I have over $261 invested. I made a lot of $5 purchases in Tesla and have been able to grow this position in with that strategy right there. But the two that I really want to continue growing, that I want to continue taking advantage of, is going to be Amazon and Google. So Amazon right now, it is at $165 a share. I do still kind of want to buy some even at this price. My cost per share right now is at $154.30. I only have $120 invested in this company, and I'm up 7% right now, 0.77 shares. But I really believe in Amazon long term. As you can see, year to date is only up 9%. It was up much higher when it was in the $200 share price. And I know that the PE is pretty expensive right now at 39.67. But look at that forward PE with the projected future earnings, 32.12. So right now, I kind of want to buy some. I want to buy some more today. I'm only going to deposit $20, $25 I'm going to deposit today. So I'm probably going to put half of it into Amazon before the share price goes back up. Even though there's some future growth already priced into Amazon, but they have been growing very, very good year over year. As you can see, in 2020, this is when they have very, very good growth. 37%. A lot of people were indoors due to the pandemic, so they had a nice 37 year over year growth that year. But as you can see, it went down right to 21%, 9% year over year growth in revenue. But in 2023, they grew back into 11%, and trailing 12 months is at 12% right now, year over year growth. They are projecting a lot of more growth, right, in the future. Their services are also growing very, very good. But operating income, which is one that a lot of people use to track this company or even do some analysis on it. As you can see right here, it is growing very, very nicely. From 2020 at $22 billion in operating income to the trailing 12 months of $54.3 billion in the trailing 12 months operating income. So this company has been doing very, very good. Revenue has been growing. As you guys can see, it just continues to grow from $280 billion in revenue in 2019 to $604 billion in the trailing 12 months right now. So this company is continuing to grow. I do believe in it long term. I do believe Amazon is just gonna continue growing. Everyone is just going more into shopping online. From what I see, I do see a lot more trucks out there from Amazon. There's even drivers that actually take it as a part-time job. They go ahead, sign up for it. They go pick up some packages, deliver it in their houses, you know, and they continue to expand in that way. So I really like Amazon, especially long term. That's why I want to buy. I want to buy some more. I want to build up this position right here, but I'm doing it on a budget on this portfolio. Google is another one. I'm at 1.5 shares right now. My cost per share was at $145. You guys know I mentioned this a couple months ago when they announced earnings. A lot of people didn't like them, especially it was the first quarter earnings this year. So I started this position then, and I started buying very heavily. That's why I got 1.5 shares, $231 invested, and my performance is 11%, which I'm very happy about. I think one of my subscribers, Douglas, he's buying also Amazon. So leave me in the comment section if you're buying anything in the growth sector. And then let's go into the weekly challenge because that's where I made my purchase for the dividend portfolio, which it was Visa, and I made a $85 purchase. So I have my $15 from my weekly challenge that I usually have. Then I had like $28 from the Fidelity credit card points that they give me. Which I do not advise. If you're not very good at handling credit cards, please do not apply for any credit cards. But I do use it only for things that I'm buying on a weekly basis, like necessities, pretty much. So I pay them off every week or every 2 weeks, so I don't get any interest charged into that. But I do earn from my daily purchases, right? From my everyday purchases, I do earn some points, and they deposited for me, which I mentioned in the previous video, of around $28, $29, which is awesome. And then I put like another, I think it was like $40 into this this portfolio. So I was able to make a $85 purchase. So this was the very first purchase for Visa for the August challenge, which was selected by you, the subscriber. Share price was at $256.79. So I'm very happy about that pick right there. So it was really, really nice. And as you can see, we're going to go back into my dividend portfolio. And if you see, my portfolio is at $15,473. I'm up in the positive by 6%, $900 in the positive. And I only have 4 positions in the red as of right now. Most of my positions are in the green, as you can see. Even Kenvue right now. It is in the green right now. Jeremy and St. Louis, they both been buying Kenvue when it was like around $18 a share price. I think Jeremy was buying under 18, and St. Louis was announcing that St. Louis was also buying around the $18 price, if I'm not mistaken. So Kenvue right now, 21.3 shares right now. I'm in the positive only by 0.7%. I am most likely gonna buy some more today on the deposit because I want to continue growing this position. So I'll probably put like around 2 cup of coffees, $10. Very easy purchase. Pfizer is one in the red right now that I need to continue growing this position, especially with that nice 5% dividend yield that Pfizer have right now. Ticker symbol PFE, 16.6 shares. My cost per share is at $32.47. So I can continue bringing down my cost. I started this position at around $35, $36 a share. So that's why my cost is much higher than the share price it is right now. I should have waited, right? But I was a little bit impatient and I started buying some shares. I'm in the negative by 11% in this position. So I'm going to be buying some more. Starbucks is another one I am going to be buying today. Those three positions I'm buying today. 8.3 shares. Share price right now is at $75.75. My cost per share right now, it is at $83.46 in the negative by 9%. I do still believe in Starbucks long term, so I'm going to continue building this position today. But I am going to probably save some money for my last position that I'm going to be buying, which is going to be this one, Visa. I know it is on a weekly challenge. I'm probably not going to make all of my buys today, and I'm going to save some more money other than the $10 to $15 that I've been doing for the weekly challenge. And I think I'm going to leave some money for Monday so I can buy some more Visa. Or maybe I'll just make a small purchase today and then the weekly challenge purchase on Monday. I don't know. Leave me your opinion. What do you think I should do with Visa? Especially right now, it is at $259. Cost per share is at 200. My cost per share is at $267. So I want to continue lowering my cost in the negative by 3% in this position. I really believe in it long term. And as you can see, this Visa position has been going up in my portfolio. Right now, it surpassed Procter & Gamble, Coca-Cola, Vichy, where I have some nice amount of money put into these companies. But as you can see, I do want Visa to be in my top 5. I do want it to be one of my largest positions in this portfolio. I would like for this portfolio to be SCHD, VYM, and Visa in the third spot. That's what I want to work towards because I do believe in Visa long term. So I want it to be a heavier position in my portfolio. Now let's see pre-market to see where it's at. If we go into Visa in pre-market, it looks like it's gonna be up only 0.08%, so it's gonna be around $260. That's a good share price for me to continue to buy some more. So I'm gonna see where I'm gonna buy at in this Visa. The PE ratio right now is at 27.80. Forward PE is at 24.28. As you guys know, they have very nice projected earnings or future projected earnings. So this is a company that a lot of people believe in it long term. I do believe that there's some of you also buying Visa. JL is buying Visa also. So and has been DCAing into it, especially right now on the dip, as JL mentioned in the comments. But analysts are calling this a buy, and I do have to agree with this one. Dividend 0.80%. And then the dividend growth, which is something that everybody likes, at 15% dividend growth. I do believe, when are they growing their dividend again? As you can see, this should be the last dividend. They usually grow it in November and payday in December. So this is going to be like the last dividend. The ex-dividend date is August 9, which it is going to be, it is today. So that means any shares that you held as of yesterday, you will be getting paid the dividend in September. So I want to grow this position some more because they are due to grow their dividend hopefully in November. So let's see how that dividend is going to grow. Look at that payout ratio. Only 22% right here, which is awesome. That shows how safe the dividend is. They can pay it very comfortably, still pay off debt, buy back shares, do all that good stuff. And a company that I wanted to show as a quick bonus that I've noticed beat the top and bottom on their earnings is Parker-Hannifin, ticker symbol PH. And as you can see right now, this company in the last month, as you can see, it is up 11.71%. They announced earnings the other day, so they went up 8% after being down. Not year to date, but they were down in the last month. And if you can see right here, year to date, it is up 23.91%. PE ratio for this company right now, it is at 26.71. Forward PE with future projected earnings at 21.64. Analysts are calling this a strong buy right now. Dividend 1.15%, $6.52 per share per year. But they have very nice growth, year over year revenue growth. As you can see in 2023, that's when they had very nice year over year growth of 20%. But trailing 12 months right now is at 9.26%. If you open up the revenue also, they went down from $13.6 billion in revenue in 2020 to $19 billion in 2023. This is a nice company too. The operating income is also growing very nicely from $1.8 billion in 2020 to $3.4 billion in 2023, and in trailing 12 months, $4.1 billion. So this is a company, just keep your eye on it. If you hold it, please leave me your opinion in the comment section. If we check the PE ratio, it has been going up, right? So it's usually doesn't trade at these prices or at this PE, right? As you can see in 2019, it was at 13.56, but it looks like they have been growing very nicely. Anything that I'm missing, leave it in the comment section. And if you see the dividend payout ratio, it's only at 30%, so pretty safe. They have been growing the dividend for 68 years, and dividend growth 10.97%. So they had a very nice double-digit percentage growth in the last year. All right, everyone. Please don't forget to hit the like button, subscribe to the channel, and leave your opinion in the comment section. Which stocks are you buying as of lately? I'm definitely excited to make my purchases today. My portfolio, I'm very happy with it. Everything is in the green, but also all my positions are pretty much above my cost. So I gotta do some research to see which are the ones I can be buying as a DCA investor right now. All right, everyone. I hope you enjoyed this one, and I'll see you on the next one. Thank you. Disclaimer, I'm not a financial advisor, and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.